Hello and welcome. The show is Policy Watch and I'm Athar. Without further ado, let's see our top stories this week. The rupee tumbles again. Concerns abound not just within the industry but also the government. Finance Minister says a period of tough austerity measures might be on the anvil. Retail inflation shows a spike yet again, moves into double digits for the month of April, settling at 10.36%, up from 9.38% in March. Milk, edible oils and vegetables get costlier. And finally, in a case of classic flip-flop, the government decides to cut oil imports from Iran by 11%, a volte-face from the line taken during the BRICS summit recently. Rajesh Mahapatra, Deputy Executive Editor of the Hindustan Times and a friend of the show, is in the studio this week to help me deconstruct and analyze these developments. Welcome to the show, Rajesh. Before we start and dive into our first story, sweltering heat outside, the government must be feeling it too. An Indian summer ahead for them, rupee getting down, going down, tumbling against the dollar, also inflation going up again?
Summer of discontent.
That's what you're calling it now, yeah. Summer of discontent. That's a good one, sir. But do you think, especially since on Wednesday, Pranab Mukherjee came and sort of hinted that he will have to take some tough measures. Do you think we could see some tough policy announcements in the weeks to come?
I'm not sure whether we would get to see some tough policy measures come our way, but it is clearly time. I think it is overdue. Tough measures are overdue. I think we have been putting it under the carpet for too long, and we are beginning to see the pain and the price that we have to pay for it.
And the pain getting translated and passed on to the consumers, you and me as well.
Everyone,
yeah.
Everyone. It's not just consumer. The policy space for our policy makers is also shrinking. The room to maneuver for our corporates, our businessmen, our entrepreneurs is very limited now.
Right.
The options are very limited today. We are not really heading toward good times. Things are going to, in all likelihood, the indications are, the writing is on the wall is that it could get bad to worse. It is getting bad to worse.
Right. On that point, sir, we'll take a look at what the rupee had to go through during the past couple of weeks. Now, the Bombay Stock Exchange continued to tank this week, while the Nifty also performed below expectations, even as Finance Minister Pranab Mukherjee sought to allay fears of a continued slowdown. The markets experienced this dip after the rupee continued its free fall this week, with the currency hitting an all-time low of 54.56 against the dollar. The Finance Minister, however, assured Parliament that India's growth story is intact. Our bureau filed this report. Take a look.
A depreciating rupee and a weak global market cues coupled with heavy selling in Asian markets led to the Sensex falling below the psychological 16,000 mark for the first time since January 9, 2012. The financial crisis followed by political uncertainty in debt-stricken Greece has further led to a loss of investor confidence globally, with investors making a beeline for the traditionally safe dollar. Conceding that India could no longer ignore the crisis in the Eurozone as it was affecting sentiment at home, Finance Minister Pranab Mukherjee attributed the fall in both the rupee and the Sensex to the politically volatile situation in Greece.
Whether Greece will be revived, whether the package which was worked out by ECB, where IMF is going to make a contributory role by providing additional $600 billion support, now that has been put in question mark and uncertainty is prevailing.
Seeking to allay fears, especially those for industry and investors, Pranab Mukherjee said that despite the slowdown, the Indian growth story remains intact and the target for growth would stay at 7.5% of the GDP.
This we shall have to accept it. You cannot expect in a growing economy, in a developing economy, and particularly in the context of the international scenario, when International Monetary Fund on number of times is to revise, re-revise of the growth projection of the major economies of the developed countries.
Reiterating that the government was taking adequate measures to check the slowdown, Mukherjee added that the Reserve Bank was also closely monitoring the currency as well. The exchequer has been under considerable pressure on account of the subsidy bill this fiscal, something that the finance minister wants capped at 2% of the GDP.
Second objective is of the fiscal consolidation. Many people said that how would you be able to keep it within the 2% of GDP?
The rupee had hit an all-time low against the greenback on Wednesday, falling to 56.36, beating the previous low of 54.30 set in December 2011. The finance minister has promised some tough austerity measures in the coming years to consolidate the fiscal situation, but at the same time has said that there is no need to press the panic button just yet. Bureau Report, Rajya Sabha TV.
There you go, Finance Minister Pranab Mukherjee. Tough austerity measures that he's announced. But before we go to the measures that he might come up with, let me ask you this. He said on Wednesday the India growth story is intact, primarily to allay the industry sphere. But you and I know that not a lot of people agree with that right now. With the rupee devaluating, with inflation coming back with a bang, do you think, even if it's not over, do you think times of worry start for us now? Because the growth story seems to have a big dent in it now.
Well, you don't expect the finance minister of a country to sound out an alarm. The job that every leader does and they are expected to do is to be optimistic and spread a message of optimism among people. So we don't expect the finance minister to stand up in parliament and say, yes, the economy is in crisis, yes, that we are heading for bad times. But we also know that there is nothing that suggests that things are going to get back to normal or things are going to get back to a situation which would make us really feel that optimistic or share that sense of optimism that the finance minister spoke about anytime soon. We had yesterday the latest statistics on retail inflation rate. This is the new index which was launched in January, which gives us a much better sense of the hardship that consumers have to face. It's now back to double digit again.
10.36?
Yeah. We have the rupee, it went down, it came back, recovered, and that sort of gave us a sense of assurance that, things could be getting better, and now it's again heading south. And there are different views, but if you look at what is driving the rupee down, there are some serious structural deficiencies that are showing up on our balance of payments.
Right.
In some senses, there are parallels being drawn to 1991.
People keep coming and saying the same thing again and again. I've been hearing this for weeks now, that the parallel with 1991 is very worrisome, isn't it?
People tend to draw parallels because the symptoms are similar. There are some key, I would say there are, one of the big difference this time is we still have a lot of foreign exchange reserves. But we also are seeing the foreign exchange reserves falling at a very sharp rate.
Right.
If you look at the latest statistics that RBI released, they now stand at 292 billion for forex reserves. If you take the foreign currency assets, that is excluding gold and STR, it's about $254 billion. That's down $18 billion from a year ago. That's down about more than $5 billion since the beginning of this year.
It's a big figure.
That's down $1.5 billion only in the last week.
Right.
So there is something that is going, that is worrisome there.
We're talking about the rupee, and last week the rupee touched an all-time low of 54.36. The previous low was in December 2011 when it went to 54.30. Now, did you expect the rupee to weaken so much? Even if Finance Minister Pranab Mukherjee says Greece has impacted the weakening of the rupee against the dollar, people are buying dollars because it's a traditional safe haven for investors when they panic. But did you expect the rupee to fall so much, even after Greece?
Certainly not. And as one sees, every time you have a situation like this where dollar starts gaining strength, you do see the rupee weakening. But if you were to ask, should the rupee have weakened as much as it has, the answer is no. If it was only because of what was happening in the international domain, in terms of only in the currency market, in terms of dollar. and that's where we need to look beyond what is happening in the currency markets and what is happening in the eurozone to see how things are playing out in the Indian subcontinent. Some people say that there has been, FIIs are pulling out. There has been capital flight, and that is putting pressure on the rupee. Well, that is again part of the
to some extent it is
yes,
true.
but not to the extent. If you would look back at 2008, we had a worse situation in terms of capital flight and capital being pulled out by FIIs. But that didn't impact the rupee as much as what we see happening to the rupee today.
So very briefly then, why do you think the rupee has tumbled so
I think
much?
there are more than one factor. It's not as much as the supply side, but also there are certain things on the demand side that are playing out over there. And we tend to not pay as much attention to it as we should. I would pick on two things, and I think on one of these shows earlier we had discussed about gold and current account deficit.
Yes.
I think gold, that accounts for the second largest import item on our BOP, and we haven't done anything to dissuade or discourage the import of gold. Then you have the oil import bill that's soaring, and you can do very little in terms of influencing the oil prices in the international market, but you surely can do a lot at home to dampen consumption.
Hold that thought, sir. We'll come back to oil, the oil subsidy bill as well after the break. Short breather. Coming back, we'll talk to Rajesh about oil imports and our oil subsidy bill as well. Don't go anywhere. Stay tuned. Welcome back to Policy Watch. We're still with Rajesh Mahapatra. Rajesh, we talked about the oil subsidy bill as well. FM has hinted at some tough measures on the annual in the coming few weeks. Do you think he's finally ready to bite the deregulation bullet?
He has to bite the bullet. I don't think there are any easy answers to the problem. As we speak, I think the oil subsidy bill is heading toward 150,000 crore.
Right.
That's something which we just can't afford. There will be arguments about how much hardship it could brought upon certain segments of the consumer, how it could have an inflationary impact. But I think if we sort of let it go on like the way it is now, we may be risking much bigger problems in future.
Right.
I think if you were to tell me if the FM can bite a bullet, I would say, can he make 100 rupee a litre for petrol? I think we need to start talking in those terms. We need to make the prices prohibitive.
Right.
They have to be, the operative word is they have to be prohibitive, whereupon you force people to leave their cars at home and take to the public transport. However, these measures will have credibility and will have more equitable impact only when you back them up with adequate investment in public transport.
Right. Hold that thought, sir. We'll discuss the other part of the double whammy that Finance Minister Pranab Mukherjee seems to be going through. That's retail inflation. Now, the consumer price inflation, or CPI, shot up to the dreaded double-digit mark for the month of April, according to data released by the government on Friday. The combined rate of inflation on a point-to-point basis has been pegged at 10.36% for the month of April as compared to 9.38% for the previous month. The CPI data comes just days after the wholesale price index, or WPI, jumped to 7.23% on account of the steep spurt in vegetable prices. Here's a report. Take a look. For a government that's been on the back foot for the alleged mishandling of the economic slowdown, the news just got a little worse.
The considerable increase in milk, edible oils and vegetables are the main drivers behind the spike in retail inflation. According to the figures released by the Central Statistical Organization or CSO, the prices of vegetables went up the most by 24.55%, followed by the prices of edible oils, which went up by 17.63%, and milk products, which went up by 14.94% on a year-on-year basis. Prices of products like meat, fish and eggs shot up by 9.95%. Non-alcoholic beverages were dearer by 9.52% as compared to last year. Prices of cereal and its products saw a rise of 3.94% over the April 2011 levels. With Finance Minister Pranab Mukherjee already hinting at some tough austerity measures in the days to come, the government seems to be headed for a very serious phase of fiscal consolidation in the near future.
I cannot create a situation where this great country will have a problem, because we will have to overcome the crisis collectively, and we are trying to do that.
A swift depreciation of the rupee hasn't helped matters either. The currency has depreciated by almost 7% in April alone, making the case for yet another rate cut by the Reserve Bank of India in June a long shot. Industry has been clamoring for at least a 100 basis point cut when the RBI meets in June. The absence of a fuel price hike is also, according to some analysts, adding to the RBI's constraints. Bureau Report, Rajya Television.
There you go. Inflation, the bugbear of inflation coming back to haunt the government again. When I was a cub reporter, starting out in the business journalist arena, double-digit inflation was a word that used to send my editors into a tizzy. We haven't seen it for a while, but the cost of vegetables and edible oils mixed together, I think have jumped 24.4%. Why the sudden jump all of a sudden?
All of you who didn't see, in the early part of your career, double-digit inflation and what it means, are to be blamed as to why we are in this scenario today, because we have not, even the media has its own share of fault in how we have not been able to sensitize people about this. I mean, if you take today's newspapers, it seems that everybody is more concerned to know about IPL, Shah Rukh Khan, and something else going wrong with IPL, and the very serious news of a consumer price index growing at a rate of 10% plus, it has been tucked away in some corner, and that shows as to how seriously we are looking at this problem, and also that perhaps also provides you with an answer as to why the prices are going up like that. Perhaps there is too much money in the system, but that is only one side of the story. This is not the first time we are battling with this. For the last 3 years, this keeps coming back to us, and we don't seem to be doing much. There has been talk about creating neighborhood farms in big cities. There has been talk about, one question we need to ask, there was this talk about how organized retailing could actually cut down on intermediary costs and bring down vegetable prices. We don't see that happening. Now there is a fair bit of organized retailing that has come into this segment also. Is it because really the cost of production going up? I don't think the rise in cost of production of vegetables is explaining the entire
the jump in
the jump in vegetables. And so would it be for milk? So would it be for poultry products? There is clearly the margins are going up as they travel from the farm to fork, but we don't seem to be doing much about it. We don't seem to be doing much in terms of agricultural research. This is a country of, we say we are a country of great jugaad technologies.
Right.
There's a lot of jugaad that also happens perhaps in this sector, but I don't think we celebrate that jugaad. There hasn't been much innovation in this respect. So we need to seriously think about this, because this is at the end of the day a country of 1.2 billion people. They need to be fed, and we can't let we were just coming out of the whole. We were thinking that we were leaving hunger as an issue behind. Soon the reality may be, it is probably coming back.
Rajesh, just very briefly, if you could, let me ask you this one question on how this jump, this spike in inflation and prices will affect a possible rate cut by RBI in June. Now, industry has been clamoring for it. Does it also erase any chances of a further ease in interest rates?
That's what I said. You get into a vicious cycle. Now, I think, if you recall, during the last policy rate cut, the RBI governor said that we might be constrained to have further rate cuts if the inflation scenario doesn't ease. And I don't think his fears have gone untrue.
Right.
So I don't see there is any, I mean, I don't see the RBI having much room to do anything.
No elbow room for the RBI.
No.
Absolutely.
You are into a scenario where you will have to you will have to come to terms with high inflation. There has been a structural break in the price regime. This is something, you just can't wish away saying that, seasonal factors will take care of things, that if you bring down fiscal deficit, that we hope, that we bring austerity measures. No, none of these things are going to, they require certain structured, long-term responses.
Right.
And that's not going to go away.
Right.
So you, on the interest rate scenario, you're going to have high interest rates continue for some more time.
Absolutely.
And all of these things will be working to keep the scenario very bleak for your industry and economy as a whole.
We'll take another break. We'll come back with yet another story. Don't go anywhere. Rajesh, Mahapatra and me will chat a little more after this short breather. Welcome back. You're still watching Policy Watch. Rajesh, we'll take a look at yet another story on oil imports. It should be good now. India has decided to cut imports from Iran by over 11% this fiscal year to 15.5 million tons. India has been under intense pressure and lobbying by the United States as it seeks to muster global support for its sanctions against Iran. The Policy Watch team filed this report. Take a look.
The decision to cut imports from Iran comes at a rather timid capitulation by the government. During the BRICS summit in New Delhi, the government had made it clear that cutting crude imports from Iran was not on the cards. Finance Minister Pranab Mukherjee had even echoed the same sentiment on his US visit last month, saying that a fast-developing economy like India needed resources and it would utilize all possible options, including Iran. The move comes right after US Secretary of State Hillary Clinton's India visit. Clinton had stated that India needed to further reduce imports from Iran to win waiver from US sanctions. The US has already granted waivers to the sanction for Japan and 10 European countries, but has left out China and India, Iran's biggest clients. India imports nearly 80% of its crude oil from 30 countries around the globe and relies on Tehran for 12% of those imports. During 2011 and 12, India has shipped 18.50 million tons of oil from Iran. Bureau Report, Rajya Sabha TV.
There you go, Rajesh. Pranab Mukherjee goes to Washington, makes this passionate speech about how India will utilize all countries, including Iran, because it's a fast-growing economy and we need energy resources. Hillary Clinton comes calling, boom, 11% cut oil imports from Iran. Classic case of flip-flop, or do you think it was a capitulation by the government owing to intense pressure from the US?
What I understand from my friends who understand this area much better than I do, that we also have entered into an agreement with Iran for a 45% rupee denominated trade agreement, and that's primarily aimed at working around the sanctions that Iran faces today, so that we can continue to trade with them. And now this 11% cut, and I think this is part of the game when it comes to international diplomacy. It's one sees it more as a give and take, and I'm told that Hillary really didn't take back much when she came here. So it was, a balanced stuff.
Right.
So I would like to go with that view.
One last question. I know that you claim that you're not an expert on oil and oil imports and crude, but where do you see crude prices going? Up is the only way, because you think it'll get far worse?
No, now crude prices, if with the recession fears in the global economy deepening, you may see crude prices easing.
Slightly.
Easing. The question is not whether crude prices will ease or not. The question is, what are we doing? Because we cannot afford to have short-term responses. What I was trying to emphasize that we need to look at our energy security with a much longer-term view. And it's not just enough to say that, well, we are taking a longer-term view of our energy security, but we need to start acting, and we don't seem to be doing that.
Right.
We are still dilly-dallying on what do we do with, the automobile growth. We talk about taxing diesel cars, we don't do that. We talk about raising parking fees, we talk about not subsidizing petrol sale. We don't seem to be doing much. I think, we can't avoid taking some harsh and bold measures. I mean,
Absolutely.
It's time.
Absolutely. Point taken, sir. On that note, we'll end the program. Of course, Rajesh and me are obviously in agreement. Our first story today was the devaluation of the rupee. Tough times ahead, probably for the finance minister and his team. It is time now that we take some tough austerity measures. He's already hinted he will. The time has probably come to bite the bullet on deregulation. And like Rajesh Mahapatra said, prohibitive pricing is the key word there. Our second story this week was retail inflation touching 10.36%. Now that is worrying for everyone, including the consumers, including you, including me, including everyone. Perhaps FDI in retail needs to be revisited. The government, some sections of the governments have also said this could further ease inflation. We'll have to see whether or not the government acts on it. Of course, a lot other structural problems that need to be addressed. Finance Minister Pranab Mukherjee and his team also need to look into that. As far as oil imports are concerned, my guess seems to think that it's a game of give some, take some, not really capitulation under pressure from the United States, as some people seem to think. So it could be part of a larger game. We have to work around the sanctions on Iran, and that's perhaps why we have cut back imports by 11%. That's all the time we have on Policy Watch this week. Next week, we'll get another guest and another 3 top economic stories of the week. Till that time, thank you and goodbye.